Good morning, everyone. This is Connor from 0DTE Traders here to present our market minute for October 3rd, 2023. It is 11:15 and the SPX is trading lower, down 1.4% to 42.28. We're seeing a spike in volatility, plus 12%. Defensives, everything is just red across the board here. While rates are moving higher, dollar also a little bit higher here this morning. And market internals are completely one-sided at bearish extremes. Now, this was quite evident this morning, but it has since been exacerbated due to the JOLTS data, which really solidified the down move, breaking the critical 42.60 handle, this flat bottom that has been support, or at least was yesterday. And we had a nice little back test, and well, we're continuing lower. We're definitely overdue for a bit of a bounce at this juncture, but we have taken out some critical levels, i.e. 42.50, with a gap zone here on the downside to about 42.21. If that does give way, well, we got the big put wall at 4,200. Now, I don't know if we're going to see a move of that magnitude, but it is definitely possible in this type of market. Now, we did open with a setup this morning. This is a rather high probability setup, particularly in negative gamma, which was a double cycle high. But we did open with a gap down. So what is common in this type of scenario is we often see a relief move before rolling over. Now, sometimes we do, sometimes we don't. So we were recommending to build a position. So I entered the downside butterfly at 42.25. This is our vol pin idea, which comes into play when the market is trading at extremes. So I entered here and then added to the position here. So in for a total of 35 average. And since then, I've scaled out at major support here at G1, and I continue to hold a half position. It's currently trading for about 160, and I think it's definitely in play for a pin, although we are most certainly due for a bit of a bounce. But point is here, when you get a setup like this, and same thing works in reverse, if it's a double cycle low and you get a gap up, you often see that relief move. So maybe not going full position right away and sort of building that position can get you a better entry price. Now, what's actively at play here is a negative feedback loop. Now, we've seen these quite often here in negative gamma, and this sort of just exacerbates the price movement where the market declines, it increases the put values, which makes dealers sell stock, implied volatility increases, dealers have to sell more stock. And then this encourages participants to close calls, buy puts, prompting more dealer selling, and it's just sort of a feedback loop. And these are the type of days where you just sort of bleed lower and the market really struggles to bounce, meaning that pops are getting sold into. Now, this could definitely reverse, and you could see a positive feedback loop occur. However, more often than not, these tend to persist throughout the day. If there is any chance of a reversal, it is usually a late afternoon reversal. So that's something we're watching for here to see if we get, maybe a 130 type bounce. I'm being pretty reluctant to play counter trend to this. I have a general rule where I don't play counter to large moves in implied volatility. And just using VIX as a proxy here, plus 12%. There's a lot of sell flows coming into the market, so don't really want to play against this, but we're clearly extended. So we're not necessarily, when we trade, we're not predicting where the market is going to go. We don't make any sort of predictions in that regards. Rather, we trade a process, and we want to determine where the market currently sits and what those odds are. Right, so we wouldn't necessarily be chasing the move down here, right? We were entering up here as per our process, and chasing at this point, though the market could continue lower, is definitely elevated risk given how oversold we are and how extreme some of these metrics. Now, I just want to touch on our pin ideas. These are low risk, high reward butterfly spreads that we trade on 0DTE. And we provide a total of 3 potential pin ideas every morning in our market report. This is released prior to the market open. We have pin high, which is our bullish pin idea, pin low, our bearish pin idea, and volatility pin, which is our aggressive high volatility pin idea. Sometimes it's on the upside, sometimes it's on the downside. Today it is on the downside, it is in play, and well, we just hit target on it. Now we teach a whole process on how to determine what pin is in play and how to time your entries and exits. Now, as far as how these pins are determined, it is via a model. So we consider factors such as gamma, vana, and charm, because oftentimes the market tends to support pinning at specific strike prices, particularly when in positive gamma and during the final week of monthly option expiration. So we do have statistical edge here on where the market may pin. Now, certain environments are better than others, there's no doubt. Although I must mention, our approach to butterfly spreads may be a little bit different than others. We do not buy a pin idea and hope for a pin. Rather, we are trading a process and scaling in, scaling out of positions, and ultimately really focusing on the win rate and playing the probabilities that shift throughout the market. And again, we have a whole framework for this. So if you want to learn our process, you want to get access to these ideas, our analysis, our key levels, visit our website at 0DTEtraders.com and consider becoming a member. I hope to see you soon. Best of luck out there today.